Despite being among the world's largest producers of citrus, Pakistan is set to export only 400,000 to 450,000 tons of orange during the 2025-26 season, well below its estimated potential of 700,000 to 800,000 tons, as growers and exporters struggle with high freight costs, border restrictions, and the absence of effective government facilitation. During the 2024-25 season, orange exports stood at around 350,000 to 400,000 tons, with Russia, Indonesia, the UAE, Afghanistan, Saudi Arabia, and Central Asian states as major destinations. For the current season, a slight improvement is expected due to better fruit size and quality in Sargodha and adjoining areas, but structural issues continue to cap growth. The crisis has deepened despite an excellent crop. This year's orange crop is outstanding in both quantity and quality, but it has become a pattern that whenever the crop is good, it goes to waste. The Afghan border issue has been hurting growers for the last couple of years, while the recent goods transporters strike caused further damage as some export orders could not be met due to unavailability of reefer containers. Market prices have collapsed sharply during the season, and orchard owners are selling their produce at whatever price is being offered. At the start of packing for Dubai exports, large-size oranges fetched 120 to 125 rupees per kilogram and smaller fruit 90 to 95 rupees per kilogram, rates that held until November 30th. By December 10th, prices fell to 100 rupees per kilogram for large fruit and 70 rupees per kilogram for small. Between December the 10th and 15th, factories sold large fruit at 85 to 90 rupees per kilogram and small at 55 to 60 rupees per kilogram. After December 15th, the situation became alarming, with factories offering barely 75 rupees per kilogram for large fruit and 35 to 40 rupees per kilogram for small, despite near-total buyer apathy. According to industry estimates, traders are selling oranges to factories at 1,400 to 1,500 rupee per mound, while factories have cut packing speeds drastically. Daily operations halved from 10 to 5 pickings, causing repeated topping of orchards and severe damage to trees. Border closures have brought the export chain to a standstill. Over 100 factories did not open at all due to the Afghan border issue. Of the remaining units, most were already operating at around half capacity, and now closures are accelerating. Nearly 50 units are shut, with many more on the brink, putting up to 800,000 workers at risk of unemployment if the crisis persists. Some fruit had been going to Afghanistan through Iran, but tensions on borders have created a hostile atmosphere in Afghanistan against Pakistani products, and a consignment of bananas was damaged by some people in the markets there. Cold storages across Sargodha are reported to be 80 to 90% full, putting oranges worth millions of dollars at risk of spoilage. Growers fear losses of 8 to 10 billion rupees, with ripple effects likely to hit future crops, including wheat and sugarcane, due to shrinking farm resources. Stakeholders have urged the government to take immediate action by finding alternative international markets and routes for fruits, subsidizing logistics, resolving the border issue, and supporting exporters. Saving orange exports is critical to saving farmers and strengthening the national economy.